Now if you've been following KS, you know it's been a roller coaster. A brutal stomach-churning descent for much of May and early June. But then, something happened. A spark. A flicker of hope. Just recently Kaspa showed a powerful bounce, kicking off its recent lows and clawing its way back to around 7 cents, a little over 0.07453. For a moment the bulls roared. The community collectively held its breath, wondering if this was it, the grand reversal we've all been waiting for. But here's the cold, hard truth, my friends. While that bounce was impressive, the bigger picture, it hasn't changed. Not yet. We are still trapped beneath a formidable enemy, a descending trend line that has been a relentless barrier, pushing Kaspa down, crushing every rally attempt since the beginning of May. Think of it as a suffocating ceiling that keeps getting lower, preventing any real upward momentum. This isn't just a random line on a chart, this is a psychological and technical wall. And until Kaspa smashes through it, we can't in good conscience call this a true reversal. It's a lifeline, yes, a desperate gasp for air, but not freedom. The good news? The token did find strong support. We saw a solid floor emerge around 6.5 to almost 7 cents, right in that 0.065 to 0.067 zone. That's where the buyers stepped in, like a coordinated army, pushing the price back up with one of its strongest daily candles we've seen in weeks. That, my friends, was a sight to behold. But as of right now, as we speak on this crucial June 25th, Kaspa is just hanging there, hovering precariously around the 7.4 cent mark, still stuck, still below that critical barrier that has consistently snuffed out every single rally. It's kind of like a fly hitting a window pane over and over again. Now let's pull back the curtain and get into the nitty-gritty. What exactly are we looking at today, June 25th? The current price is approximately 7.4 cents. The 24-hour change? A modest plus 1.67%. Not bad, but definitely not a breakout. RSI, 14 period, is 51.93, right in the middle. Neither overbought nor oversold. It tells us there's no immediate pressure from either extreme, which in this context can sometimes be its own kind of tension. The volume is stable, not rising. And that, my friends, is a problem, because Kaspa's price action right now is like a spring being coiled. We saw that strong rebound off the 6.5 to 6.7 cent support zone. That sharp green candle from June 24th, it absolutely broke the short-term losing streak. It was a moment of triumph. But here's the kicker, the follow-through has been limited. It's like someone fired a cannon, but the projectile just fizzled out. The price is now testing that descending resistance line from May's highs. It's pushing against it, it's knocking on the door. But that door is still shut. It still holds firm as an impenetrable barrier to any significant upside. Let's be brutally honest. The Kaspa chart, despite that recent bounce, still leans bearish overall. That trend line, it's a phantom limb of pain, capping every single rally attempt. Even though yesterday's bounce was one of the biggest single-day moves we've seen in weeks, the broader narrative, the big picture, it simply hasn't shifted yet. And why not? Two critical reasons. First, the volume hasn't picked up, not nearly enough to signal a true change in character. For a real, sustainable reversal, we need to see an explosion of buying interest, a surge of liquidity, confirming that the bulls are truly in charge. We're just not seeing that yet. Second, the price is still firmly stuck below that critical 0.080 to 0.082 resistance zone. This is a psychological and technical brick wall, without a daily close above 0.076, and more importantly, without confirmation from momentum indicators. This could simply be another lower high in an ongoing, grinding downtrend. And that, my friends, is a recipe for disaster. Now let's look at the technical indicators. This is where it gets really interesting, and frankly a bit confusing, which adds to the tension. MACD with settings of 12 and 26, we're seeing a slight bullish crossover here. On the surface, that sounds good, right? It suggests weak upward momentum. But it's weak. It's tentative. ADX at 14 is sitting at about 28. This indicates moderate trend strength. It could support a breakout. It's like the engine is warming up, but it's not in gear yet. CCI at 14 is a concerning negative 74.37. This tells us price action is still below average, still very much under pressure. The bears haven't given up the fight. Ultimate oscillator is at about 52, showing a mild bullish bias. Again, mild, not convincing. Rate of change is negative 1.883. Price is still below recent levels, confirming that underlying bearish tilt. Bull and bear power at 13 is negative 0.0011. The bears, even if by a whisker, are still in control. Look, the indicators are all over the place right now. MACD and ADX are hinting that the rally might keep going, giving us a glimmer of hope. But CCI, ROSI and bull bear power, they're throwing up serious caution flags. It's a tug of war, and the buyers, despite their recent effort, haven't fully taken control, not by a long shot. So, what does this all mean for Kaspa today and in the immediate future? We have three distinct scenarios, each with massive implications for your crypto journey, and understanding these is absolutely critical. Scenario number 1. The bullish breakout. This is what the bulls are praying for. If Kaspa, against all odds, manages to not only break but sustain a daily close above that 7.6 cent level, and critically if it does so with a significant surge of volume, I'm talking about a real undeniable influx of buying pressure, then, my friends, we could see a powerful surge. We could see it climb to 8 cents easily, and if that momentum holds, we might even stretch our sights to 9 cents. That's where the next major resistance cluster sits, and a break there would be a truly seismic event, signaling a potential trend reversal. But remember, the volume is key. Scenario number 2, the neutral stagnation. This is, frankly, the most probable outcome for now. If KAS price keeps getting rejected by that stubborn descending trend line, if it bumps its head against that ceiling again and again, it's highly likely we'll just continue to see sideways movement, a choppy, frustrating consolidation between the 7 cent and 7.5 cent range. It's a waiting game, a grind, no clear direction, just a lot of noise and indecision. This is where patience is absolutely vital and where impulse decisions can hurt you. And then, there's scenario number 3, the bearish decline. This is the one we don't want to see, but we must be prepared for. If Kaspa fails to hold its ground, if that $0.067 support zone gives way under renewed selling pressure, especially if we see increasing volume on the downside, then things could get ugly, fast. A break below 0.067 could send Kaspa heading back down towards 0.063. And in a worst-case scenario, if the panic sets in, we could even see a drop to 0.060. That would invalidate the recent bounce and confirm the continuation of the brutal downtrend. So, here's my wrap-up for you today on this pivotal June 25th. Kaspa has shown a commendable bounce off its recent support. That's a positive, but we cannot for a second mistake that for a full trend reversal. It's a battle won, not the war. The descending trend line remains the ultimate hurdle. The indicators are screaming mixed signals, telling us the market is still very much in a state of flux. And critically, the volume isn't there yet to ignite a true bullish surge. For now, expect Kaspa to likely continue its dance between 0.070 and 0.075. We are in a high-stakes waiting game. The future of KS in the short term hinges entirely on a clear breakout above that trend line and 0.076 resistance, or, unfortunately, a decisive breakdown below 0.067. Until then, stay nimble, stay informed, and most importantly, stay disciplined. Before you make any moves, please, listen carefully. This is absolutely critical. The content you've just watched is for informational and educational purposes only, and is not financial advice. The cryptocurrency market is highly volatile and inherently risky. Prices can fluctuate wildly, and you can lose all of your invested capital. Do your own thorough research, consult with a qualified financial advisor, and never invest more than you can afford to lose. Past performance is not indicative of future results. I am not a financial advisor, and this is not a solicitation to buy or sell any cryptocurrency. If you found this analysis helpful, smash that like button, hit subscribe, and ring the notification bell so you don't miss our next urgent update. Let me know in the comments below. What do you think Kaspa will do next? Break free or crash deeper? I want to hear your thoughts. Stay safe out there, crypto fam, and I'll catch you in the next one.